Hello, everyone, and welcome to Pidgin Peeps, the podcast segment where the nerd birds here at Pidgin flock together and chirp about what's new, now, and next in the payments industry. Caw, team, happy days. Who's ready to talk about some instant payment statistics and forward looking metrics today? So, before we dive into today's discussion, I would like to introduce you to the team, and I'm going to give them the opportunity to do that themselves. So, to start off, Tim, share with us a little bit about yourself, your role, and we'll go from there.
Gladly. Tim Rosansky, so I am the SVP of Sales here at Pidgin, and I've been with Pidgin since inception.
Hi, I'm Abhishek Viraganta. I'm the CEO of Pidgin. I've also been with Pidgin since inception. Excited to be bringing our product to market with the help of folks like all of y'all on the line.
I'm Kevin, the payments professor Olson, and I've also been with Pidgin since day one, and I'm just always excited. And when it comes to electronic payments, instant payments, I get even more excited.
Well, since you're showing that level of excitement, Kevin, let's dive right in. What's the current pulse of faster payments in the US as we cross the midpoint of 2025?
Oh, it's good. In fact, it's incredible. Instant payments are showing, I got to say, some instant growth. When we look at what's happening in the market, it's phenomenal. Double what we saw as far as volume in FedNow from first quarter to second quarter. We went from having a million point three transactions to over 2 million transactions. We are seeing too, the dollar values are growing with them as well. And, sometimes I'm starting to point out to people and saying, you got to look at this as the big picture. And we look at big picture. It's not just FedNow that's seeing growth. It is also the RTP network. And if you look at the graph, the hockey stick is taken over. And if you combine the numbers together, billions of dollars per quarter are being processed through those networks.
And Tim, you've seen a little bit of this too in our client experience and also in conjunction with the market data. How have you seen adoption shift since January?
Yeah, so and adoption is really such an important discussion. Interesting because really adoption is twofold. First, we would need to discuss FI onboarding for the faster rails in general, right? But then beyond that, we need to look at the actual volumes and the usage overall. Now, the good news is that when we look at the FedNow service as a whole, we understand that adoption has been strong in 2025 with regard to new FIs added, as well as the volumes increasing month over month. Our own FI count volumes have really mirrored this since January as well, with new FIs added monthly volumes exceeding our initial projections.
That's amazing. And Abhishek, I'm sure you have some opinions here too. Why is 2025 a defining year for faster payments? And maybe we could tease a little bit about our own special announcements that are coming up soon.
Absolutely. It's hard to add to what Tim and Kevin said, right? The number of institutions on the network, that's a big announcement that we're going to be having here upcoming. The number of transactions have skyrocketed. But really, I think for me, what's defined 2025 is that a lot of the use cases don't feel hypothetical anymore. People are dabbling their toes in all sorts of new ways to use faster payments, and we're not having to ideate. We're able to point to real world examples as how people are using these payments to really improve payment systems across the board.
Could you go a little bit further there, Abhishek? Maybe look at how the market has shifted, maybe industry verticals, maybe institution size, different use cases that you're seeing where it's no longer just dipping the toe. Where are we seeing the crucial changes here?
And that's what's so interesting, Angela, is we really don't have any more. I think we used to have live in this dichotomy. Your asset size tracks directly with how many transactions you're running overall as an institution. That's simply not true anymore. Your number of account holders, your number of accounts in general aren't driving those. It's really your ability to take your tech stack, take a hard look at it, and then look at what industries, as an example, insurance payments starting to flow across the networks continue to impress us. We've been talking about earned wage access now for the past couple of weeks, and who doesn't want their paycheck faster, right? We're seeing the volumes demonstrate that continues to be true. And that really ties back to community banks, community credit unions. They no longer have that disadvantage. If their tech stack is competitive, if they have the ability to cater these faster payments in an API-based format, or if they're able to even just receive these faster payments, they're ready and able to get off of the races and providing the same level of client experience that larger financial institutions are providing at the service level. So that's what I mean. We've seen institutions that are in the millions of assets have use cases as exciting as folks in the billions of assets. That transaction volume continues to impress us month over month, really almost exponentially growing.
And I think that you highlighted something really important there, Abhishek, around client, account holder, user impact. So, Tim, what do you think about how FIs are actually using the faster payments rails? Where are we seeing the most movement from even our client base or your experience in speaking with FIs as you've been kind of out there on the road? What's new?
It's an important question, Angela. We're seeing more movement on B2B, which has traditionally typically been the case. But we're also excited to see more and more consumer use cases, just for example, disbursements for insurance, payroll, gig work for businesses. So we do expect to see more steady traction from this point onward as we work toward the end of 2025 and beyond.
And I think there might be something to be said here in terms of some Q2 numbers that were recently released from both the Fed and TCH. So, Kevin, maybe you can touch on a couple of those and then relate it back to what Abhishek and Tim are seeing in the market before we dive into the next couple of topics.
Well, one of them I got to point out is the fact that the average transaction on the FedNow service is $115,000. That, okay, and that's something that went up. And I went on record saying last quarter that we would never see it this high again. And that was, when it was like 28,000. And
I remember you saying that. We did the end of 2024 predictions. We were talking about the transaction value. And you said on this very podcast, nope, it's not going up. If anything, we're going to see it plummet in the next 2 quarters. So what's going on?
And I think what's key to understanding that too is some people might say they raised the limit to $1 million. Well, okay, that did happen during the quarter, but at the very, very end of it. So I don't think that plays into it. And people ask, to jump off of the use cases there, what is causing that? And we're seeing on RTP and FedNow, a lot of it is in the mortgage space. A lot of it is in the loan space, especially even on auto loans. So there are some high value, not just low dollar value, but a lot of high value transactions that are taking place. To get to that type of average, it's just phenomenal to see that. We know that we got 1,400 institutions live, more being added daily when it comes to the FedNow network. We got over 900 over on RTP. And again, it's just the volumes are rising and they're rising percentage-wise every quarter. And I'm going to go on record again and say I don't think we'll see a $115,000 average. However, I would say to any financial institution out there, even if you're just receive only, are you okay with receiving a $115,000 deposit coming in nights and weekends as well as during business hours?
Exactly. And you did talk about both networks, so we need to dive into that a little bit because we're getting ready to head into fall conference season. It was still a huge topic this past spring when we were all out on the circuit with our friendly neighborhood payments associations and a lot of other folks still talking about the word that we all don't know if we want to say anymore. And it's not
it, are you?
If you're a payments beer nerd and you're listening to this, that's your cue. Where are we with interoperability?
All right, interoperability. It is not a dirty word. Here's how I want to address interoperability. First, I'll just give you the answer. FedNow and RTP alone are not interoperable. With Pidgin, we have ways to work around it. But I also want to point out something, and this is how you should really look at this. When we look at ACH, the clearinghouse offers ACH through EPN. The Fed has Fed ACH. We look at wires. The clearinghouse has chips. The Fed has Fed wire. We go and we look at checks even. They both have separate check processing as well. So when it comes to requiring interoperability, it's not necessary because it doesn't exist in other payment channels. I will concede, yes, the ACH operators, the separate ACH operators do an exchange to make some interoperability in ACH, but that's the only one. So we don't really need to have that in place because service providers like Pidgin have found ways to be able to help and aid your account holders when they go to make a transaction. Whether it's going to be RTP or FedNow, we can help you in the routing of that transaction. And whether it's business or consumer, we can help you with that transaction.
And Tim, I would love for you to build on this because there's some great comments that the professor made in explaining what's going on with payments behavior, generally speaking, in the US. But are you seeing a meaningful shift in the partnerships format as it relates to the topic of interoperability? What's been your experience in the first half of this year, and maybe what do you see going into the second half?
Certainly, Angela, and to answer your question, really quite a bit so. And of course, we can only speak from our point of view, which is probably a little different than most, considering how critical partnerships overall have been to our initial go-to-market strategy. The part that feels different to us at this point in 2025 is how willing so many FIs are to take a more comprehensive, holistic approach to building out their faster payment strategy. So our customers tend to lean on us quite a bit to better understand how their decisions and strategies they implement now might age, but they do so by looking at our more tenured customers as their guiding points. We do think that the technology provider's relationship with the industry is a rather critical piece. So one of the first questions we'll get from any new prospective customer is typically something along the lines of, what is Pidgin's relationship with our core or our digital banking provider or our fraud partner, so on. With 20 plus of these technical integrations essentially on the shelf at Pidgin today, this really has become a welcome discussion as we approach the second half of 2025.
And I would be remiss if I didn't highlight and maybe ask Abhishek to brag on our fintech collaborations with some of our industry partners, some recognition that we have received over the last year. So Abhishek, can you just tell us a little bit about the success that we have seen and been recognized for in collaboration with our partners? Maybe give a couple of shout outs to some folks in the audience?
Absolutely. I think those that have been around me are probably sick of hearing me talk about our American Banker recognition. Really proud to have been recognized as one of American Banker's Innovations of the Year. And that was in partnership with United Bankers Bank in Minneapolis. United Bankers Bank was one of our early clients and really talks, really speaks a lot about the amount of interplay there is between various stakeholders over the journey of the transaction. United Bankers Bank is the most important relationship for a lot of community banks in the greater Midwest. And that, as an example, their role in the settlement of the transaction, in making sure that community banks can realize their liquidity. We've seen that with United Bankers Bank, Corporate America Credit Union, and even as an extension of that, then to Tim's point, the important role in collaborating with your core partner, because your core is ultimately the most important technology piece at your financial institution. It's hard to discuss payments, account holder relationships, any of that without talking about the core. So partnerships like our partnership with Visify is an easy example to talk about, as well as modern banking systems, ASI. I know I'm missing a number of our partners, but the collaboration aspect of it is really just, I think the problem with fintech in general is we start to talk about fintech in context of how many people can touch this transaction before we all start to lose money, right? Really,
Right.
I really like to see FedNow, RTP, instant payments as a whole. We've taken a different approach to that. It's more about how do we provide the level of experience that folks are expecting on these rails, and that's why I'm so proud of our collaboration, proud of our partnership program, and our to Tim's point, the 20 plus integrations we have on the shelf is it's never been about that. It's been more focused on how do we optimize the experience for both the financial institution and the end user, especially as we see the shift in how folks are thinking about these services.
And I think when you talk about optimization, this isn't necessarily a connection that I see a lot of people make, but when we're talking in the industry and we're working with stakeholders, one of the questions that the professor and I receive a lot is around regulation and risk management. So, Kevin, I know we probably can't dive super deep here, but there is a regulatory environment surrounding how companies like Pidgin partner on these networks and with these stakeholders. So, can you dive in a little bit there?
Well, you talk rules and regulations. Always the biggest thing is usually what do I go by? And each network has its own rules. We dive deeply into those rules. We work with both networks to stay up to date, provide education on it. But then we also talk a lot about the rules changes. Like I mentioned earlier, FedNow going up to $1 million. Well, RTP went up to $10 million for a single transaction. And that caused 195% growth in value of their transactions. Maybe that didn't actually cause it, but it is something that did happen. And something else that we saw as far as changes taking place, and it's more rules, it's more in the operating procedures with FedNow, was they started adding the account activity thresholds, a new way of being able to have fraud monitoring or extensive monitoring for a participant on the network. And that adds to the already existing negative list that's there. And it's just showing that as far as rules and regulations, historically, we've always been like, oh man, we got to make big changes for this. We got to get ready and prepared for this. Instead, what we're starting to see is the networks are opening up in a way to make it easier for institutions to get on board. The networks, especially like with what FedNow's doing with their fraud group and with the scam classifiers, the fraud classifiers, that account activity thresholds I mentioned, they're making it so that the tools really are being put in place instead of cumbersome regulations to make it to where we're going to have a better network for all of our account holders.
Angela, I'd like to add to that as well from the technical side. As an example, RTP has begun the rollout of the RTP 5.0 standard. And they've been very accommodating, supportive, as well as given us so much runway that they've helped us kind of get to a point where we're ready to roll that out with little to no client impact. We're very, I think, grateful for the level of support the clearinghouse has given us as well on their enhancements and the way they're working through that.
That's really exciting. And actually, I think, Abhishek, since we're talking about innovation, I'm wanting to look ahead to the end of the year. So maybe we'll stick with you before we dive into some of Tim's predictions. So, what are so based on your experience with RTP Network and this 5.0 rollout and the work that we're doing with the Fed, what is the next wave of use cases that's gaining traction? What do you think?
So I look forward to this being played next year and everyone egging me. We talk a lot about next wave use cases to the end of 2025. Things like insurance payments ramping up in volume as more providers are getting onto these rails, right? That becomes a big part of how we talk about the next wave is what are we doing that makes people's lives ultimately better with these types of payments? And just as much, how can we the flip side of that, maybe the more cynical side, but also the more pragmatic side, is how can we talk about this in a way that allows financial institutions to monetize some of these payments? Because ultimately, this infrastructure comes with a cost. So how do we offset that cost and not have to treat it as a loss leader? That's a very important part of the next wave of use cases. So requests for payments in business invoicing creates a lot of accountability, tracking, all of those kinds of things, while also creating real revenue streams for financial institutions that are offering those types of payments. Real-time escrow and property technology, that continues to be an important discussion. Indirect lending as well as funding auto loans, something we're starting to hear a lot of. Those evolutions in the way we're thinking about instant payments, not only as a loss leader, honestly, payments beer nerds, if we could play a drinking game around the number of times we've had to talk about peer-to-peer over the last 5 years, we might never recover. But the idea is that we have to be talking about the use cases that are allowing financial institutions to not think about these payments as loss leader, but really as a future opportunity for fee revenue growth while really improving their account holders' lives.
And that's something that we will have a piece of thought leadership out there about. A little bit of a shameless plug on the Pidgin side. We have a white paper that will be out there for people to access where we talk about monetization strategies for FIs that are either seeking to be fast follow and to adopt the instant payments rails in the US, and or FIs who are in their receive first mode, and what it looks like to create a monetization strategy around that goes upwards through senior leadership and senior stakeholders. So watch this space. Make sure you check out our white papers and our thought leadership and our playbooks, because a lot of the thoughts that you're hearing today on this webinar/podcast, we put those in writing for you as well. So you have an artifact. So you're not just playing a video to your CEO. So as we're looking into predictions and pivots for the second half of 2025, Tim, I'm really interested in what you're seeing in the market in terms of specific FI segments or verticals that you believe are primed for the real-time leap.
Gladly, Angela. We're seeing significant traction from financial institutions that are outside of the larger markets. So more rural locations, a lot of traction actually in the western half of the United States. We're also seeing a lot of smaller asset financial institutions punching well above their weight class with regard to volumes and volume potential. That's been a surprise and a very welcomed one. And then finally, we're also seeing the larger asset financial institutions, which sometimes historically tend to take a more plodding, methodical approach to change. They're really starting to understand the space and find some rather sophisticated use cases in the market. So to summarize, I think we're seeing something for everyone.
All right. Kevin, do you have a quick prediction? Because then I'm going to finish
do I got a quick
after
prediction.
that.
It's going to be good. It's going to be real good. All right, I might have to add a little bit more to that. Number one, I'm going to say, everybody, if you're not following me on YouTube, get out the Payments Professor, because there are some videos that are out there predicting the third quarter, and it's not even over yet. Predicting the end of 2026 too, and well, it's definitely not here yet. But I want to piggyback a little bit off of the use cases and say that request for payment is going to take off, and I know it from personal experience. I went in and was able to do a A-to-A instant transfer, and it was for the purchase of stock. So I'm going to tell you the stock I bought. I was able to get Circle stock while it was still very, very low. And if y'all know, it has exploded. And why is it exploded? Well, I bought it before the Genius Act passed. Before the Genius Act passed.
Way to rub it in, Kevin.
You like that? I mean, yeah. Well, here's the thing: is I didn't buy enough to retire off of, so I'm still going to be here for all of y'all. Okay. Now, here's the thing on that. I bring that up because the Genius Act means we are now going to see stable coin in electronic banking, and financial institutions. This means you can join the game of being able to use stable coins. But the thing is here, use case wise, you will need an RTP and or FedNow solution. And I would say both, to be able to fund and defund wallets at a very minimum. You will need to understand instant payments from how RTP and what FedNow is offering you before you get into the stablecoin game. And you're going to need, it's going to become required that you get into that game, because yes, we saw, I want to say almost $750 billion between RTP and FedNow get processed last quarter. Stablecoin's already doing more than that. And these networks are going to work together. There's going to be some symbionts between these networks that you're going to have the instant solutions to be able to provide to people for those types of use cases. And then there will be a tie-in between what's going to be capable with stablecoin too.
I absolutely agree. It's definitely an exciting space to watch, the relationship between instant payments in the US and then how the technology integrations are going to enable institutions that have already been fast movers to leapfrog ahead of their competition. And I'm sure that each one of the four of us has seen a conversation around that in the first half of this year. So now that we're coming kind of to the close of today's podcast and webinar, I want to do a section called Chirp Back. So rather than a clap back, it's a chirp back because we're pigeon nerd birds. And what I would like is for each person that's on the call to look back at the first half of 2025 and then make a prediction for the rest of 2025. And because I know Tim loves improv so much, we're going to start off with you. Tim, what is your 2025 chirp back?
Sure, Angela. Well, I think this is a now thing, right? Instant real-time payments is a now discussion, but it doesn't have to be as painful as FIs might anticipate. So that's the beauty of implementing a truly novel offering. That's something that we've learned not just in the first half of 2025, but in years past as well. I can't tell you how many times we've brought on a new customer who was just kicking the tires, or at least thought they were just kicking the tires and evaluating their options, and then they get a phone call from a board member or their CEO that says, hey, why don't we have this? And then we kick off a project, and in many cases, that project might take just a few weeks or so, and then it goes live. And that's due to the pre-existing integrations that are on the shelf that we chatted about earlier. So really, just to put it plainly, our most successful customers have benefited from building a strategy, taking action, and then refining along the way by leveraging real data usage points and market insights from experts in the
Kevin, I'm coming to you next.
Okay, well, first of all, I want to throw out something like we're going to see 6 million transactions by the end of the year on FedNow. I mean, I'm willing to go there and say that that's going to happen. But I also want to, make sure that people understand we're going to continue to see a rise in the number of financial institutions on the network. Now, that's an easy prediction to make based on I know what we've got in the pipeline. But folks, there's still some room for you. I mean, we're getting busy, that's for sure, but we can find room for you, and we're going to continue to see the network grow. But another area I want to go into is we're going to also see the networks themselves continue to provide tools and support to help mitigate, limit any fraud activity happening on the network so that there's protections there, that they're going to continue to be able to put out those tools and help protect the network and work with the industry to make sure that we have the highest quality instant payments available here in the US.
That's wonderful. I'm going to dive in here with my 2 cents as a payments Elsa or the payments Elsa. Apparently, there are articles going along with it now, which is fun in terms of parts of speech. But this spring, when we were out talking to regional payments associations, when we were on the conference circuit, talking about what we thought was going to happen this year, I mentioned multiple times that I thought that this was $1 trillion market opportunity plus for institutions in the US. And it turns out I was right. We hit 750 billion in 1 quarter, and that was only after a short time of the $10 million increase for the RTP network. It was like 2 weeks after the Fed increased their limits to $1 million per transaction, and that's with the default at an institutional level being $100,000 per transaction. So reference back to what we talked about in this call on average transaction value. I thought it was going to be $1 trillion opportunity in the market for FIs, and I think that it will quintuple between now and the new year. So I think it's going to go up to 5 trillion. And then Abhishek, if you wouldn't mind, our fearless leader, bring us home. Predictions and your chirp back for 2025.
I don't know how I'm supposed to follow that, but so my chirp back really is that I think we're going to see a new evolution in user experience and the way our people continue to think about faster payments. The ramp in volume, the ramp in dollar value, and really that shift in mindset away from batch-based payments towards individual transactions is finally starting to show itself. I'm really glad that we're starting to move away from discussion of payment hubs in general. I don't know about you, but last thing I want to do is run a mile in my leather dress shoes. You need a good pair of running shoes to handle faster payments, and that's kind of what we're talking about when we're talking about trust and speed. All of the metadata that comes with a faster payment, the amount of impact that the speed of transaction is having on the need to report, and as a result of that, the impact that that's having on reconciliation and practices. It Blisters aside, I think really you need a purpose-built system to talk about these kinds of things and the user experience that comes with that, both for back office and then ultimately for the end account holder that comes from a purpose-built system for faster payments. We're continuing to see the impact of that, and institutions that make that type of decision, I think are it's paying dividends for them.
That's incredible. I love the way that you talk about purpose driven payments. This has been such a great conversation, everyone. Thank you for sharing your morning and your thoughts on the first half of 2025. If you haven't already, please follow Pidgin, the Payments Professor, and Payments Elsa on LinkedIn and all other social channels that you take your time of your day to spend looking at. And if you have any further questions or would like additional information about how your institution can work within the instant payments ecosystem in the US, you know where to find us, www.pidgin.net. And as the payments professor would say,
Class dismissed.